Okay, mornings, ladies and gentlemen and friends, those who are invested with us, fellow shareholders. I'm honored today to be the keynote speaker for the first symposium. Those who know me that I actually grown up with the REIT industry since I started ARA together with Dr. Lee Chong Kong. We listed the first Fortune REIT in 2003. Since then, we never stopped, and we have actually listed 8 REIT across the region: 3 in Singapore, 3 in Hong Kong, and 1 in Malaysia, and 2 in Korea. You add up 9, but actually Fortune is cross-listing, so I actually double counted. So before I go on to the proper to talk about why invest in REIT and Singapore REIT market outlook, today my speech is not going to be very technical. It's more to talk about the benefits from the retail markets. I think that it's a long due that the industry will need to do more to educate and share our information on the benefits and the risks of investing in REITs, this product. As usual, before we go into the proper, I'd like to spend a couple of minutes to talk about the group and the background, a little bit of publicity. Okay, I think ARA is one of the ARA is one of the largest integrated real estate fund managers with 8 REITs and 8 private funds under management. We are the first real estate fund managers to be listed on the Singapore Stock Exchange in 2007. We are among the largest REIT managers in Asia, with 11% of market cap of public listed REIT in Singapore and Hong Kong combined. And through our REITs and private funds combined, we have more than 26 billion in assets under management today. We have a very established network in Asia Pacific, with presence in 15 cities and over 1,000 staff last year. We established our Korea office early this year, and also Australia office. To further expand our footprint in region, our aim is to enhance business scalability while diversifying our product offering to investors. A quick look at the REIT that we're managing. Those people who are actually very familiar is basically the Suntec and the Fortune and the Cash who has listed in Singapore. We also manage the renminbi REIT called Hui Xian, which manage the Oriental Plaza in Beijing, plus a few other assets in China. And we have the 2 Korean REITs. Our shareholders, currently our shareholders, of course, this business is started by myself and Dr. Lee Chong Kong Group in 2002, and we have grown from nothing to today 26 billion of assets. Straight trading company headed by Madam Jiu joined the shareholding in 2013. Now our market cap is about Singapore dollar 1.5 billion. As of, I think, yesterday. Our trading volumes, performance from January 14 to 15, which is very okay. And but those who actually invested with us from the day one when we IPO in 2007, they should be very happy shareholders. And I always got this feedback during ARA shareholders meeting. They are very happy. We have managed to outperform the broader markets index since listing with a return of approximately 118%. Along the way, obviously, any good companies, you win awards and be recognized by the industry. So the group, including all ARA Group and also all the REITs under our management, have received numerous awards, countless awards every year, in, year out. Okay, so we are actually very proud of our group CEOs. They all sit right in front of the here to give the support, okay, and also to explain to you guys after during tea breaks and lunch break, anything want to know about Suntec, Fortune, Cash Logistics. Okay, that's all about the publicities. Okay, let me talk about a little bit of what is REIT. And I think there'll be a repetitions from what Sunny and Eric talk about. I think, but the purpose here I want to is to share and going back to the fundamentals. For those who already know, please bear with me. For those who don't know, first time hearing it, I think it will be meaningful to understand the mechanics. REIT is not a share that you try to buy and sell overnight and make 20%. It's something that was only say is something that long term, and I want to go into very detail this morning. I think REIT is an investment vehicle that holds a diversified pool of professionally managed real estate, and it's structured in a way that you can participate in the ownership benefit of the real estate, and at the same time liquid enough for you to buy to get out of the stocks quickly to equity markets. A typical structure will be, as usual, you have a REIT, you have unit holders, you have trustee, you have REIT managers, and you have the owning the properties. Now come to the point of why REITs are a good alternative investment. Please bear with me that I'm not here to do a hard sell, and I will share with you some of the risks on REIT, but I also advise you guys that as a retail investors, I think important to analyze, study, and I'm going to highlight a few key points. I'm not here to say that you must buy A REIT or B REIT or C REIT. I'm just trying to share with you the benefits. I think there are many key benefits in REITs, and I think REIT is a very good investment instrument for retirement planning because it offers strong, stable yield, while remained relatively low risk. In the next few slides, I'll go into the detail of some of these benefits. I think top of my agendas will be the professionally managed aspect of the REIT. REIT are very professionally managed with a few layers of management, and this is something that a lot of people don't understand. On the top layers is the trustees. Under the trust deed, the trustee is responsible for holding the property in trust for unit holders. Therefore, it must exercise due diligence in protecting the right and interests of the unit holders. This offers a first layer of safeguards for the investors in REITs. Secondly is the REIT managers, whose duty include operational, financing, asset management, investment, divestment of REIT. Good managers aim to deliver sustainable distribution and long-term capital stability to unit holders. The REIT managers also has to ensure that REIT comply with the Singapore listing rules, which include the MAS Code of Collective Investment Scheme, the Security and Future Act, and Singapore Company Act. And on top of that, REIT managers are licensed by MAS. So I want investors to be aware that this is not somebody on the street just come out and manage a REIT. Okay, there's so many layers of protection on these vehicles and this type of assets class. We can't buy an aeroplane because John Lim like it, right? We can't buy a boat because Yoshike like it. We have to confine with the rules and the regulations. So it's very rigid and it's very properly managed. And lastly, we have the property managers, of course, who oversee the day-to-day operational matters such as marketing of space, property management and maintenance, coordinating fit-out, supervising the performance on contract. So every dollar you pay, the fees are actually for the managers and the property managers to work on improving your returns and also assets appreciation. Okay, so I just want to say that, and this is a very safe, controlled vehicles. The second point I want to make is the diversifications of benefits. I think all REITs in Singapore hold a portfolio of properties. REIT can be diversified by holding a number of properties in various locations or various countries. With the exception of some industrial properties, most properties are multi-tenanted and the lease expire at different times. And this is another way of diversifying the risk. Okay, the building won't go empty overnight, because the tenants are renewed on a different timing. From the investor portfolio location perspective, Real estate had investment characters that are distinct from that of a traditional asset class. So offer diversification benefit in a mixed portfolio. Next point will be stable rental income. REIT typically hold a portfolio of income producing properties with stable and predictable returns. In Singapore, under the Property Fund Guideline, REITs are required to invest 75% of their deposited property in income-producing assets. The reason why I want to highlight all this is, it's not a speculating product. The managers, the CEOs, we just can't do what we want. There's a guideline for us to follow. And then no more than 10% of the REIT depository property may be in the development activity. And that, again, reduces the risk of REIT being exposed to development risk, like buying land and then the property market collapse and then you ended up lose money. Okay. Of course, one of the reasons why Singapore REITs are getting very, I would say that populous and grow faster than our counterpart in Hong Kong is, of course, the tax concessions. Okay, tax transparency is actually the key of Singapore's success in the REIT sectors. These attractions of investment in REIT listed in Singapore enjoy tax transparency as long as 90% of our taxable income is distributed. Okay, so as long as any REIT, and actually, besides the business trust is not governed by this, all the REITs in Singapore actually distribute more than 90%. I can't think of anyone that is not, including Hong Kong. Okay, and so that we all the REITs, the 26 numbers, right, enjoy the tax benefits, which will actually pass it to you. And the Singapore government also come up with a very, as far as you Singaporean invest, there's no tax. Okay, it passes through 100%. Foreigners invest, we charge them 10%. Okay, and so basically, it's an instrument that you actually take 100% of the rental income from all the properties that the REIT that you invested in, and then to use yourself and without the tax. So it's a huge benefits, Next point will be regular distribution of income. Since REITs are required to distribute at least 90% of the taxable income to unit holders, in the same year in which tax income is derived, investor can expect regular income stream. And most of the REIT, I think all, except one or two, they actually distribute their income on a quarterly basis, okay? Or at least half yearly. So that will provide you with a regular retirement cash for expenses. And they are also conservatively geared. REITs are currently subject to gearing limit of 35%. Okay, if you are rated, you can go up to 60%, but most of the REIT managers in Singapore are very disciplined. If you can't, if you really studied it, they're in the regions of less than 45%, I suppose. REIT also provide, REIT managers also proactively manage the REIT debt maturity profile and lower aggregate leverage to refinancing and repayment of borrowing. And REIT managers are expected to manage debt capital more prudently in 2015. It is widely anticipated that US Federal Reserve will raise interest rate in the near future. Liquid relative to the hard assets. Of course, this point is obvious, right? REIT offer investors bite size, liquid alternative to real estate. Instead of we got to pour out a couple of $1 million to buy apartments or a house. REIT allowed you to invest even as small as 1,000 one lot, which is 1,000 shares. In any of you like Suntec, you buy 1,000 shares. Or you like Capital Mall, you buy one lot, and allowed you to participate in a very small, affordable bite size. And it's also liquid that you can sell, buy easily, not like hard assets. Inflation is one factor that affect the price of real estate. Everybody knows that. Everybody in Singapore is an expert of real estate. You talk to anybody on the street, they are expert. They have an opinion of the price going up, going down, this way, that way. And I think inflation is one of the factors of affecting real estate. Of course, other issues are supply and demand for space, economic conditions, interest rate. A comparison, I've done a small comparison with my team on the US REIT dividend yield and US inflation rate over the last 24 years, show that the correlation. Furthermore, a study in 2012 demonstrated that inflation rate and real estate returns in key Asian markets are correlated in the long run, indicate that Asia real estate can be used to hedge inflation over a long period of time. Good corporate governance. According to the recent ACCA KPMG survey, Singapore ranked third in the world for its corporate governance requirements. In October 2014, MAS issued a consultation paper on the enhancement to the regulatory regime governing REITs and REIT managers. This is expected to strengthen corporate governance for s-REIT and should benefit REIT investors in the longer terms and boost Singapore's attractiveness as a REIT hub. Attractive returns and position to growth. REIT tends to enjoy a relatively low cost of equity capitals relative to the developers, of course, because they are relatively low risk and provide predictable income. REIT managers can value add to investors through making more yield accretive, high quality acquisition, larger REIT, which cheaper cost of fund will be the biggest beneficiary. Attractive returns and position to growth. REIT also offer potential for capital appreciation under a very certain environment. For example, in Australia, REIT have done very well in recent years. Some analysts are of the opinion that they can be further upside despite the rich valuation, because REIT valuations are to be determined based on distribution yield spread to Australia 10 years bond. I'm talking about Australia, not Singapore. Given the 10 years Australia bond yields has compressed, the spread has widened, and hence there could be significant further upside to REIT valuation if the spread compress. I think we are talking about the Australia experience, as what Tony has talked about it. We have very short history on REIT. This, I think, 12 to 13 years of history, relatively short. Data are not as comprehensive as the US, which have maybe 35 years. Australia have 20 over years of data collected. But based on the characteristic of the products, I would think that a very good study will be the Australia and the US market. And I suppose that beside the yield, investing in REITs over long-term period, you also can expect a capital appreciation by the managers who actually added assets and appreciate the values over time, but not on the short-term speculative basis. I think that is something that we have to be mindful about. I would think that personally, our wise retail investors, including myself, those who actually follow, I do invest in REITs too. I take about 5 to 7 to 8 years horizon in terms of investing REITs, because you want the yield plus the capital growth over time. A total return concept in the US will give you, if you look at the US statistics, a 10 to 12% returns for 10 to 15 years investments are considered great investment, and this is the class of asset that generally can produce that. Of course, the difference between Singapore and the US market is because US market do give you 8% cash yield, a smaller growth, okay? Singapore give you less cash, like 5 to 6%, but we actually offer a higher capital appreciation, okay? So after talk about all the benefits, okay, and I feel that I should actually share a little bit of risk. Not every product have its risks, not always rosy. With other investment, REIT come with a bit of their own risks, and I would like to highlight a few. Of course, one is increase in our benchmark 10 years yield, put a cap on the increase and cause a drop in s-REIT unit price possible. While it is possible to hedge their debt at fixed rate in the near term, I think these hedges will expire and it will be more expensive to roll over in the future. Okay, and based on my estimate and the research, it estimates that the 1% hike in the rate, okay, in our interest rate will reduce the average distributions from about 2%. Okay. And the underlying performance, second is underlying performance is linked to rental incomes, of course, which in turn is linked to occupancy and rental rate. In Singapore, the lease expiring profile is also relatively short. Okay, it's generally between 1 to 3 years, and demand for space could potentially be affected by the economic situation. So we need to be mindful of that. And the beauty of REIT is actually, I actually use a very layman terms, it's like a supermarket concept, okay? In the past, before REIT products is being developed, if you want to invest in real estate, you go to developers, okay? The CapitaLand, the Keppel-land, the Wing Tai and all that. And they do everything for you. They build shopping centers, build houses, anything. You take the risk of very developer risk and also investment risk. When the REIT products develops, and they are actually very product specific and asset specific. Means, for example, Capital Mall Trust is shopping centers. Suntec is Suntec, right? Office, okay? Cash logistic is logistic, whether it's Mapletree logistic or cash. They are very specific in their product class. So if you make an effort to study the economic cycles and go and read about some of these Jones Lang reports or CBRE report, and if you like that, you think that, oh, office sectors is doing well, you're good, then you can invest more in the office REIT. And you can move your fund around after a couple of years. You don't need to stick with the developers, and you got no control over what they want. So basically the industry has actually evolved. If you like a certain class of product, you can go invest in it. You like the industrial, you invest in industrial REIT. There's enough choice. I think now it's 7 or 8, 10? 7, 8 or 8 industrial REITs around. You can pick and choose. Retail, they got 4 or 5 around, you can pick and choose. And you like developer, then you invest in the developer REIT because residential is good, then you can invest in development. So that allows you the flexibility, but it comes with the risk. So if you stick on one REIT and the market is no good, of course renters fall, your return suffered, and then of course your price will be affected. Okay, but if you take a long-term views, then property is cyclical, right? You come down, you go up. So you over a period of time to be quite safe. But I'm saying that these are all risks. I'm highlighting you the risk. It's not all greenfield, all always make money, okay? So don't scold the managers every time the market is no good and then you say, oh, you do a lousy job. I don't think so. Sometimes market forces will force you to have a lower rental and therefore a lower distribution. And I think we see the similar trend as business park and the other sectors where short leases also affect our rental income. Okay, I think, and finally also when we talk about REITs, a lot of REITs, I think we do a study, I think maybe 60 to 70% of Singapore REITs have actually some exposure to overseas, Australia, Japan. I'm not talking about cross-border REIT. I'm talking about more the local REITs, Singapore-centric REIT. There are some part of 10, 20, 30% exposed. They, of course, have a subject for FX risk and political risk. So in conclusion, the sectors on REIT benefits. REITs are good instruments for retirement planning and should be component of any one of you, overall portfolio for building up your retirement nest egg. REITs should not be traded but held over a long-term period for total returns, both dividends and capital appreciation. Investors could also achieve time diversification by acquiring REIT unit over a period of time. You don't need to buy everything in one go, right? You don't need to break your piggy bank to buy it. You can buy over time. You know, every time you have cash, you collected a few lots, and over time you accumulate your portfolios if you like a certain class of assets or certain particular assets, and that's the beauty of it. You don't need to break a bank for a few $100,000 to buy a house, But you can actually collect. You have 10,000, you buy 10,000 REIT. The next month you got another 5,000, you go and buy into a REIT. So over time you accumulate your portfolio. I think the low correlation between REIT and other asset class is another reason why investors should include REIT as part of their investment portfolio. REIT higher current yield offer act as a shock absorber against daily market fluctuation and have been observed to be less volatile than the non-REIT stock. While investment in REIT is less risky, it is not risk-free. So there's no way to avoid risk completely. To lower risk, investors are advised to diversify broadly by sectors, geographical location, and tenant-based profiles. Okay, now I'm going to move on to s-REIT market for just a couple of minutes. Oh, okay. Singapore is considered as one of the conducive REIT regime in the Asia Pacific. All the reason I have mentioned that: controlled, regulated, transparent, and governed by a very good set of managers, products, and also authorities. Okay, and relatively compared with the Japan market, Australia, we are actually still in the infant state that we have still many years to grow. S-REIT fundamentals. The Singapore REIT market can be considered as having one of the strongest fundamentals in the Asia-Pacific region. We expect this to continue in the long run, despite a slowdown across the globe, Europe, Japan, and China. The fact that the real estate sectors remain relatively unaffected after the Federal Reserve ended its quantitative easing program in October 2014 show us the relative strength of the local real estate market. Singapore's reputation as a global financial center is also helping to ensure that the commercial real estate market stays strong. Many S-REIT has been capitalizing on the low interest economic environment creating in the aftermath of the financial crisis in 2009 on asset enhancement initiative, yield accretive property acquisitions. Therefore, they are well positioned to benefit from strong global economic in terms of positive rental reversion and also improve occupancy rate. What do we expect? Market outlook. We expect interest rate hike in the US. Early this year, there was a lot of talk about US Federal Reserve raising interest rate in 2015. However, we can see that this move might not come as soon as expected due to low consumption spending, less competitive export, and high unemployment in the US in the first quarter. In any case, if interest rate rise, it should not affect our REIT much as we have already hedged our exposure to this risk, and a lot of them are already priced in. Slower growth in Asia and Europe will have many different effects, from lowering rental income, occupancy rate, and growth and acquisition plan for the REITs. I think the other important point is following the white paper consultation by MAS last year, we are expecting tighter regulations of the industry coming up soon. The key proposals include: 1, improving the corporate governance and disclosure for REIT managers; 2, minimizing instances of conflict of interest, perceived conflict of interest between REIT managers and investors through refining REIT managers' compensation methodology; and also 3, operational tweaks like having REIT appear to higher leverage limit of 45 and eliminating the 60% cap on REITs with a credit rating. In addition, MAS also proposed to raise the development limit for REIT to 25% from the current 10% of total assets. Well, what I see from this is that the market will be further consolidated after the measures are implemented. We don't know when, but MAS told us soon. As smaller REIT managers will no longer be viable, the larger REIT in the market will in fact gain from this as merger and acquisition will take place, and also they can expect expand their own portfolio with less competitions. Okay, in closing, I'm making good time, right? Okay. Yep. I would like to reiterate the importance of including REIT in your investment portfolio for retirement planning because they are stable, low risk, and provide a stable stream of income. Especially for Singapore, where the market is considered mature and s-reits are generally sound with good fundamentals. Of course, I got to say that, and my legal department also asked me to say that. All investment come with risk, okay? So don't blame John Lim if you invest and the market turn. Okay, the risks are lower, but definitely there's risk, okay? But I will still encourage all investors to do their homework, okay, on the sectors and the managers. I think these are the very two important aspects. Don't just look at the sectors and say, okay, I like this, I just invest. Study the managers' profiles, and you know that there's a very distinct group of managers for these 26 REITs, and you've got to study them. And do your homeworks, and then you should invest in these sectors that you're comfortable and familiar with. Okay, I think that's my closing advice, and I hope that you guys enjoy the symposium today. After that, make some money out of this sector. This is really a great sectors to be in. Thank you very much.